The Bears push the market down, and this girl turned 6 today.
This is Invest with Jacob.
Okay, guys, so in last week's video, we talked about the fact that the bulls were in control of the market, and as long as they could push over the highs, we would expect 5,100 next. However, they failed to do so. The Bears took back control and pushed it down, and now the question is, can the Bears follow through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. Highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. A quick housekeeping note, I am out of the office today for my daughter's birthday, and I will not have a video for tomorrow, but I will be back with a video for Friday. Also, we killed it again today in PT's room. My room, we also had a winning day. Both rooms doing well. As you can see on the screen, people are making money and loving it. If you want to be part of this winning team, you're missing out. If you're not, stay tuned for later in the video. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And it does look like we got a 5-wave move down here. And as long as the Bears can hold resistance and follow through, we would be looking down toward the 4860 area overall. And so off of the high, we would count this so far as 1, 2, 3, 4, and 5. They came up just short of the 2.0 extension, just past the 1764. So a pretty common area for wave 1 of C to come into is the 2.0 extension of this 1, 2 here to complete this move down. And now we'd look for a bounce in the market. We talked about this when we got down into this area and the market reversed. I said this does look like 5 down and we should see a bounce, and that's exactly what we got into the close. So as long as the bulls can continue to push and get over the 5,003 level, we would look higher toward 50.24 to 50.38 next. And I could see them getting to that 50.38 area just based on the targeting overall of the C wave. So we'll get into that in just a second. The 382 retrace, the 5,003 area, if they're below that, we can hold that resistance and get one more push down for a wave 5. But we do have a pretty good 5-wave structure as it stands. So I would expect the bulls to be able to push through 5,003, or at least hold there and then hold support and then push up in the C wave of this bounce. So you got your A, B, and then C up into this area before turning down from there. Now, if the bulls are able to push it past the 50.38 area, I would look at this as an expanded B wave, where you have your A leg down over here, and then you'd have A, B, C up towards 5,100, and then down from there. I don't think that's going to be the case. I do believe the Bears will be able to push this down, but if they did break out over 50.38, that would be what we'd be looking for as a finish move up toward the 5,100 area, and then down sharply from there in a C wave. But with this 5-wave move down off of this high and the depth of the pullback, I do believe that the Bears are ready to go ahead and push this down through this low and then test the Fed lows as well. I did mention the targeting area and why I thought we could bounce up to 50.38. If we come up to the 618, the 2.0 extension comes in at 48.50, 48.44, excuse me, which is about 20 points below the Fed lows. And that may be just a little bit lower than we anticipate. So due to the theory, corrective depth theory, we would expect to hold the Fed lows, but they can spike it through down into this area. But I would not be shocked if we got to 50.38 because that moves our target up. And then we're right at the Fed lows for that 2.0 extension. We can come in, hold the lows, and then make another push higher in wave 5. So we'll have to see exactly how it plays out on the bounce. The higher they go, the more likely they are to hold the Fed lows. And if they stay in the 50.24 or lower camp, then we could see them spike below the Fed lows and see what happens then. Over on the NASDAQ. Now, the NASDAQ has been weaker overall. This wave B high was weaker, and then it's already broken its A wave low here, and it's broken this wave 2 low, which takes a diagonal out of play overall. So it does look like the NASDAQ is trying to play out to the downside as we would expect. And we do have a nice 5-wave move down off of this B wave high here, where you have or start of a 5-wave move, I should say, where you have 1 and 2. They completed 3 down here at the 1382 and then bounced right back into the pivot area, which is what you would expect. You would expect them to hold 17,664 overall above that, and it can get a little more complex to the downside in a diagonal type setup. But we would expect them to hold 17,664 and push down into the 17,395 area, one more bounce, and then down into that 17,275 area to test those lows from the Fed, which were around 17,250, and that would play out pretty nicely. Now, if the NASDAQ is able to push up over the 764 into this area here, we would start looking for a diagonal to the downside to play out for this C wave and ending diagonal in C, and then look for a little bit of a choppy market at that point, because remember, diagonals are three-wave structures all the way through, and that would make it a little more challenging to trade and track. But we would not look for a diagonal to the upside, given that we've broken this wave 2 low here. That takes off the diagonal that we would look for. Now, if they are able to push up through this 17,710 area, and then ultimately over the 17,785 area, we would start to look to the upside, especially if it's in a 5-wave structure. They did make a valid ABC type pattern where you have a low, a high, and a lower low. And then if they make a 5-wave pattern up, we could see them start to rally for the next move higher. However, given the overall structure of both the NQ and the NASDAQ, I do think lower is much more likely and that the bears will follow through, as well as some other indicators telling us that lower is the way. So bears are in control right now. As long as they can follow through, we would look for the 17,250 area overall on the NASDAQ and the Fed lows, which is the 4860 area over on the ES. And if they can't follow through, then we'll look at the next leg higher and how that plays out exactly. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans that are monthly, and they both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it. I want you to become part of our trading team. Make sure it's for you before you ever spend a penny. You can cancel at any time. There's literally nothing to lose by checking it out. We also have our Advanced Elliott Wave course here. You can only get this by being a monthly member, and it is free with your membership. And we go through quite a bit of stuff here: the advanced fib levels, the diagonals, the double and triple threes, the flats, the triangles, the trading, everything you want to know about the more complex Elliott Wave structures and how to figure those out when the market isn't reacting the way you would expect. As you can see on the screen, people are really loving this course. And again, you get that free with our monthly memberships. We have our Elliott Wave for Beginners online course that is $67 if you want to buy it outright, but it also comes with your membership. In this course, we're helping real traders make real money by understanding the market in a way that makes sense. It's very difficult when good news makes the market go down and bad news makes the market go up, and it can be hard to understand and confusing. And Elliott knew this long ago, as he said the news cycles didn't dictate the market. What does dictate the market is key levels, and we show you how to find those key levels, what happens when they break, what happens when they hold, and how to trade off of them effectively. The course itself is 25 videos in 3 parts, where I go through your introduction, where we go through your mindset, your emotion, the KISS method, why it works. We go through the chart setup and tools, every tool you need to use with Elliott Wave and why and how to use it, as well as the Elliott Wave for Beginners area, where we go through every wave, how to measure them, how they look, what they're supposed to be, where their key levels are, what happens when they hold, what happens when they break, the corrective depth theory, the pivot. I can go on and on about the information in here. It's amazing. I think you guys will really love it, and it will really help you understand the market. The cool thing is, as I said, if you don't want to pay that $67, it is included for free in both monthly memberships. In our first room, the Invest with Jacob room, you get all of our real-time market updates, all of our buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. If you are looking for futures trading, advanced training, individual stocks, and income trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as the individual stocks, the futures trading, the income trading I showed you earlier in the video. I showed you last week's video. He's killing it with this, guys, as well as his advanced training where he teaches you his reduced risk binary method that absolutely kills the market, where he gets you in at a cheap price and gets you big multiples on your money, and how he structures the trade is why it's so unique. It's something you kind of have to see to understand. That's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, showing you how to take a small account and grow it into a large retirement or savings account. Guys, we would love for you to get in these rooms so we can all make money together. All right, the key takeaways for today: the bears are in control of the market right now. We would look for them to bounce, though, up toward the 50.25 to 50.38. For the bulls to bounce up toward the 50.25 to 50.38 area. And from there, start to push down in 3 of C, which would ultimately take us toward the Fed lows in that 48.60 area. If they are able to push back through 50.38, then we would look for the bulls to try to give us an expanded B wave up toward 5,100 before turning down from there. Over on the NASDAQ, We hit our wave 3 target. Now we're bouncing back into the pivot as expected. We would look for them to hold 17,664 and push back down toward the 17,395 to 350 area. And then one more bounce and down toward the 17,275 area to test the Fed lows. If they are able to take it back up over 17,710 in a 5-wave pattern, we would look for the bulls to take control and count this as all of wave 4 in a shorter ABC format. Guys, that is your market update for today. I will talk to you tomorrow.